Good afternoon, everyone, to those of you in Europe, and good morning to those of you in North America. My name is Hamish Stewart. I lead the Sustainable Finance Service line here at EcoAct in London, and I'm thrilled to be hosting this webinar and roundtable today on net zero targets in the banking sector and transition plan expectations for banking clients. We're going to leave a few minutes for people to join, but I'm going to first of all provide some introductions and then also a bit of scene setting, and then we're going to get right into it with our expert speakers today. And we're thrilled to have both Anne-Sophie Castelnau, who's the Global Head of Sustainability at ING Group, and Ivan Frischberg, the Chief Sustainability Officer from Amalgamated Bank. Both of them have been involved in climate targets and sort of higher ambition initiatives in the banking sector for a number of years. So really happy to have them, and I'm thrilled to be co-hosting the webinar today with my colleague Catherine Chisholm, who's also on the Sustainable Finance team here at EcoAct. In terms of the format, we'll just go over that while people are joining. I just, first of all, I also want to say thank you to everyone for joining, because I know there's a lot going on these days in this space. And so we think this is going to be a very good opportunity to learn from leaders and leaders at different kinds of banks who are working in different parts of the world on sort of different net zero implementation challenges. I'm going to provide a very brief introduction, some background on EcoAct and some of the context, and then we're going to hear from Anne-Sophie, who has a wealth of experience and is really out in front with ING Bank, trying to operationalize some of these net zero goals. And then Ivan, he's going to explain Amalgamated Bank's approach and what they've learned along the way working with a range of different sort of net zero and target setting approaches. And then we'll have the balance of the webinar, because we want to have a lot of discussion. It's going to be a moderated Q&A session led by my colleague, Catherine. There's going to be a recording of the webinar shared, and you can also add your questions in the Q&A function, and we'll have a look at those following the speaker comments. In terms of EcoAct's background in this space, we're a pure play climate consultancy, and so we work on net zero strategy, footprinting, and then transition plans with banks, pension funds, insurers, and a bunch of different kinds of operating companies in different industries. And that's one reason why we're excited to have this discussion with some of the larger banks, because they are having to think about climate target in a fairly complex way and work with clients on really meaningful plans for implementation of these goals. And we feel like it's really crystallizing now, and we see that across North America, Europe, and in Asia. In terms of just the context for this discussion, today we're sort of bombarded every day with news around the banking system and also the climate system, and what are people supposed to do? And I think that's why we're lucky to have some concrete steps here. This discussion, I was just reading about the Basel III regime and this recent systemic banking risks that we've seen crystallize in the last couple of weeks. But this discussion is going to be more focused on the firm level, the bank level actions and targets, and how they're bringing net zero targets into the banking operations across the wholesale lending and some of the client relationships in the mortgage book, commercial property, and that type of thing. And then we might get to some discussion around the systemic risks, but it's more focused on organizational change, some risk management, and then also these big numbers around the opportunity. This is a BNEF headline around the $7 trillion needed a year to finance the energy transition out to 2050. So that's one thing to put out a headline number, and then it's the other thing to be in a bank making decisions with clients around, where is the lending book supposed to go, or what does the transition look like across fossil fuels, but also in the transport sector, heavy industry, energy, and of course, property is a big thing. How do you decarbonize the property sector? And what are the conversations, and what are the what's the education or the technical evolution towards these net zero goals in some pretty challenging industries? And then I also wanted just to flag that both Anne-Sophie and Ivan have experience in these broader coalitions. So there's the Net Zero Banking Alliance their target setting framework or their recommended framework. And UNEP FI's work in this area. And then I was involved with the COP26 and the Glasgow Finance Alliance for Net Zero commitments. And so I think the point of this webinar today is really to ask the speakers and find out from the speakers, what is happening in their institutions to make some of these commitments happen and happen in the bank, but also happen with the portfolio companies. And so, yeah, we'll see what we get to in this brief discussion, but I would encourage you to follow up with us or also Ivan and Anne-Sophie to get a bit deeper into the details. So with that, we're going to just have a little poll if my colleague is back in. If she's not, if Catherine is not, I'm just going to have a look here. Catherine, are you able to start the poll, please? We just want to check in with the audience about who set a net zero target and who's working on implementation. So we're going to hear first, once the poll is up, we will hear from Anne-Sophie. And I'm just going to give you some background on Anne-Sophie's work. So Anne-Sophie joined ING in France in 2005. And before leading the wholesale banking team in France, she held a range of senior management positions there, including head of corporate lending and head of client coverage. Before joining ING, Anne-Sophie worked for a number of other large French banks. And since becoming the head of the wholesale banking for ING France in 2017, she's also been involved in a number of sustainability and sustainable finance projects there. And now she is the global chief of sustainability at ING Group in the Netherlands. So I'm really happy to be able to have her share some of their leadership initiatives and some of that they've announced a few things around trade finance and also sector-specific strategies that they're working on to really make the changes happen in some of the higher emitting industries. I'll just take a second to look at the polling that's coming in. And we were discussing prior to the webinar around who set a net zero target, and it comes up the target setting might be the easy part, and then the implementation is, of course, the challenge. Quite a lot more work. This is nice to see different responses. So, if Catherine, if you want to close the poll, and then we'll come back to these. Catherine's going to build some questions around these poll responses, and we'll share the results, and then we'll I can welcome Anne-Sophie to the virtual stage here, and just to give a bit of background on Ing's work and their approach to the transition in some of the more challenging industries, and then as a bank, as a large bank, what they're trying to get done here. Anne-Sophie, thank you, and I'll stop sharing my screen here.
Thank you, Amish, for the introduction, and very happy to be here. And indeed, as you summarized nicely, I'm a banker, so nobody's perfect, but I have quite a long experience as a banker at ING, with a Dutch organization. And indeed, I think that's the good news, is that that's really in our day-to-day banking that we can play our role, and make our net zero ambition happen. And for that, I would say that we are at ING using 4 types of ingredients. The first one is, indeed, as you said also, we need to have very clear climate targets. And I will come back to that in a minute, so as to explain how we've built them. But next to climate targets, very important, according to me, to have a very strong governance. And it requires really to have that direction fully supported and embraced by the board, and cascaded through the organization, so as to be able to achieve those targets. That needs to be really a genuine willingness to be engaged into that direction and really walk the talk. The third element that we see as very important is to have engaged employees. And engaged employees, of course, who deal with clients themselves, are really able to execute those plans and really operationalize those targets. But I think that's also important to embark the entire organization, even beyond bankers, and really ensure that there's a good understanding of where the organization, our organization, is going, through raising awareness and providing the right learning and training for the entire organization. And finally, the last dimension that we see as very important is indeed transparency and reporting the progress or the dilemma we are confronted to. Because indeed, this is not, I would say, an easy journey, and the work is not black and white. There's no one-size-fits-all solution. And that's important to also communicate about that, be open and transparent about what we face. Well, coming back to what are we doing so as to fight climate change? The first thing we've done at ING is really to focus on where we have the most impact, and the most impact is definitely in our loan book as an organization. And contrary to I would say industrial companies, the CO2 emissions, finance emissions we are responsible for, they represent 99% of our total footprint. Our own operations are fairly limited. So that's really in our loan book that we can make the difference. And we've defined a climate alignment approach that we call TERA. And TERA is about the sectors that are the most carbon intensive sector. And for each of those sectors, we have used a science-based approach to define the pathway we have to go through so as to reach net zero by 2050. So as to do that, we've used indeed the outcome of the IPCC report, the scenario that are available thanks to those reports, and in particular the ones from the International Energy Agency. And we've applied those scenarios for those 9 sectors that we have identified that are responsible for 75% of total CO2 emissions worldwide. And those 9 sectors, they belong, of course, to the energy area. So with upstream oil and gas and power. We have also transportation, of course, with aviation, automotive, and shipping. We have real estate with both our commercial real estate, but also our mortgage portfolio. And this is quite important because ING is a quite big lender to private individuals also. And we have key industry that are represented as well with steel and cement. And for those sectors, we have now a very clear a picture of how the CO2 intensity of those sectors need to reduce over time with interim targets for 2030 and a dot on the horizon for 2050. We've not built that in isolation. We've built that with others, really working together with our clients, with the industry, with our peers, with think tank, so as to design what is required in each of those sectors so as to get into those directions. And the last example we've published was around steel, with the sustainable steel principle, but we had the same approach with shipping, for instance, for which we've played a key role for designing the Poseidon principle. So that's really for us a question of collaboration and inclusion. So now comes the, I would say, a next step, which is how do we include that in our processes? How do we ensure that we have the right level of engagement with our clients so as to get there? Because it is really about engaging with first and foremost our clients. And for that, we are integrating now climate insight in the financing process when we look at granting new loans to our clients. And we really, next to, I would say, looking at indeed the ability of those clients to repairs, the profitability of those transactions, we really look at where are they on their own road to net zero, looking at the direction in which they are. So that becomes completely part of the decision-making process for new lending. Another dimension important is to constantly update our policies. And this is important because that gives also a framework of what we want to do, but also what we want to stop doing. And one recent example is what we announced around oil and gas. and the fact that we have decided, based on the feedback of the International Energy Agency, to stop financing new oil and gas field projects. So last year, we announced that we were stopping that for what concerns upstream, so exploration production. And we just announced that we will also stop that for what concerns midstream, so basically infrastructure projects related to new oil and gas fields, taking again into account the fact that the International Energy Agencies consider that there's no need for new oil and gas fields from now on. We were the first large bank to announce that last year, and we are happy that some of our peers are continuing to that direction, because we see it as quite powerful for achieving our results. In parallel, we are stepping up in funding renewable energy. This is really what we want to foster, the transformation, in fact, of the way energy is produced all over the world. And for instance, in the Dutch market, ING is by far the largest provider of renewable energy financing. So we want to continue to lead the way in that direction. And that's why, for instance, we have also, in addition to that, announced that we will also track and invest less capital into trade and commodity finance for the oil and gas book that we have. But I will probably have the opportunity to talk a bit more about that later. Finally, we really want to embark our clients in those discussions. This is very important that we keep all our stakeholders, of course, informed of what we are doing, but clients are particularly important. We are a financing party, so we depend on our client to take action, but we really want to foster that change and ensure that we are well aligned with our clients. Just to conclude that introduction, this is not, we don't stand still. This is a journey in which we are, and that transformation, that transition is not happening overnight. We really see it as a direction, making progress, not pretending we are perfect, but really constantly learning and reviewing the approach so as to really have an impact.
Thanks so much. I mean, very inspiring. And I think something we'll come to in the questions is like the level of complexity that you're dealing with as a bank in setting these targets and then implementing them is quite high. And then also this sort of internal change process. If you're introducing exclusions on the lending side, I can imagine that's very challenging. And so I'm looking forward to getting into some questions. But first, we're going to hear from Ivan Frischberg. And Ivan is the Chief Sustainability Officer at Amalgamated Bank, where he leads impact and shareholder engagement programs. As a commercial banker, Ivan, and many of you may know him if you're in the banking sector, has been instrumental in rallying the commitments around climate change and energy transition. And he's also instrumental in setting up the Partnership for Carbon Accounting Financials, which we know as PCAF, which is now a global standard, and that happened remarkably quickly. And under Ivan's leadership, Amalgamated has also taken, so Amalgamated is a U.S. bank. They've also taken a leadership position within UNEP-FI and the work on the Net Zero Banking Alliance there. And he's also sits on the advisory panel for the Glasgow Finance Alliance for Net Zero. And Amalgamated was among I think the first U.S. bank to set a science-based target with reference to the SBTI framework, and so they've been through these processes, and so both with their own bank and also with peers, working with peers. So I'd love to hear a bit more, Ivan, about where you're at on the net zero target setting process, and then how are you prioritizing what you do next, because that's a big part of the process. Thanks. You're on mute, of course.
Yes,
yeah,
sorry.
Yeah.
3 years in and I forget. Thank you. It's a pleasure to follow Anne-Sophie, and I think everybody is following ING in this space. So it's great to be here with you and so many people today. I guess let me start with a little bit of context, because it's with the IPCC report coming out last week, it's just a perennial reminder of how far we are from where we need to be, and how urgent and dire the situation is with respect to climate change. And so, but it's, I think, important for us to kind of acknowledge the incredible growth and success that we've had and progress that we've had within the banking sector. And that really comes down to, I think, many of the people who are, dialing into the webinar here or clicking into the webinar here is, this is a lot of people across the banking sector who may not have had this role or quite the same job a few years ago, and are now part of significant teams leaning into this work. There's now, I think, within NCBA, we have 41% of the global banking sector that is now committed to the Net Zero Banking Alliance. And just as recently as 2019, the fall of 2019, when the ING was part of the leadership of setting the UN's collective commitment on climate action, there really weren't banks nobody was doing net zero. It was all a sort of a Paris alignment goal, and net zero really hadn't come into view. And really there weren't banks with targets. And now, through the Alliance, you see, a significant portion of the banking community, not just committed, but in fact operating under targets for the high emitting sectors and really starting to do the hard work that we've talked about here. As you mentioned, some of that growth has also been, we've seen it on the PCAF side. So it really was, again, we launched in 2019 in that same fall, and there was a merry band of financial institutions for a year or two, sort of trucking along and really working on developing the global standard for financed emissions. And now you have almost $90 trillion of assets across banking, asset management, asset ownership, and now really importantly, insurance. And the insurance sector has really stood up in this space. And all of that work is helping to create essentially an emissions value chain throughout the economy, where real economy companies, their financial partners, whether it's banking or investors, are all sort of starting to speak the same language and deal in the same currency of emissions. With respect to our targets and the work that we've done, as you mentioned, we published our targets in 2021, right before the Glasgow COP, and those targets were ultimately validated by the Science Based Targets Initiative. We set those targets covering commercial real estate, residential mortgages, project finance, which for us is almost exclusively clean energy, and then commercial and industrial lending, which is for us mostly small businesses. We've set absolute targets across the board, but are obviously tracking emissions intensity in all those sectors. We get to net zero in 2045, and in part do that both without incorporation of offsets, but also through ultimately the finance of emission removals. I think the hardest part of our journey was not in the target setting, as you mentioned, Hamish, but it was really in the baselining and the kind of underlying work to understand our portfolio and its emissions context. And because I think once you're empowered by that information, the target setting and planning piece is relatively easy. And then again, the work gets harder as you start to get into actually managing that portfolio and doing the implementation work. I will say about our journey in target setting, one of the biggest takeaways for us was the impact of policy. Almost as an aside, one of the things that we did as we were looking at the IEA models was to say, the models are fairly broad by region and by sector, but we started to look at within our region and within our general ledger, sort of where our business was and how it corresponded to state level policies. So we could track the amount of commercial real estate or residential mortgages, for example, in California and New York and Washington, D.C., in that area where they are jurisdictions that are covered by more aggressive decarbonization policies, whether it's decarbonization of buildings or whether it's decarbonization of the grid. And we were able to start to apply the impact of those policies and model that out on top of the IEA scenarios, and found that could be an incredible driver of reducing emissions quite more quickly than we would be able to otherwise if we were just relying on the relationship between bank and client. And so we've increasingly put a focus on that relationship to policy in the real economy as a way for the banking sector to get to its targets. In our conversation before, I think we had sort of discussed three topics that I think are on a forward-looking basis sort of coming to the fore. One is, as Anne-Sophie mentioned, around fossil fuels, and I think so well articulated sort of what the IPCC are saying and what the IEA are saying, which is, we really cannot do at this point unabated expansion of fossil fuels, and need to draw a pretty hard line there as we begin to phase out coal, oil, and gas more generally and in line with those scenarios. And I think the leadership from a policy sector, from some banks setting policies in those places is really indicative of where we need to go, but I think has become a real challenge and a real lightning rod within the banking sector, as certainly North American banks are under pressure from existing clients and from some parts of the political system to resist doing what science has been pretty clear about. So I think that is going to be a very active space. I think it's one that has been dominated by a conversation that has been, too simply put, as divestment. And I think the word itself becomes a sort of bumper sticker, but in reality, when you think about divestment being related to timeline and being related to technology, that is the reality of what we're all having to do, which is to transition certain technologies out and certain technologies in, and to do it on a timeline, but to fundamentally change the economic activity that we're supporting. The second topic within that is then just transition, and how are we taking care of all the various stakeholders and communities that as we go through this transition. And in many ways, this shouldn't be a new topic just related to transition. It's just related to sort of how the economy works and who it works for and who it sometimes works against. But I think the conversation around transition has to be one that is rooted in the transition plans of banks and the transition plans of real economy companies, so that if we are implementing a real transition plan, just transition is a part of that. Specifically, that the kind of frameworks around just transition and stakeholder and community engagement should be embedded in that. And again, I think what's too often being done is sort of just transition is separated out from our overall transition planning work that's done. And I'm hopeful, because of the work of GFANS and others, that we're going to make real progress in this year in terms of really defining the expectations for the banking sector around all of that work. And finally, just to sort of come back to the policy learning that we did from our targets, this is a place where, again, if I just look at the United States, the Inflation Reduction Act, which is the most significant climate law that we've ever not just considered but passed remarkably by razor thin margins here in the U.S. It will be 50% of the emissions reductions from our NDC as a country, and besides Amalgamated, no bank was there publicly pushing for passage of this law. And so there's a giant gap there in terms of, if we as the finance sector say we need the real economy to transition so that we can finance it, and we don't want to have to be the ones forcing change through finance, then we also need to lean into the policy world. And there's a lot of places around autos, buildings, petrochemicals, there's a lot of different sectors that need aggressive policy work where banks and financial firms could really be standing with a set of the leading clients in these spaces to help bring about the policy changes that we need. And so excited to get into a conversation about what that would look like, that kind of policy engagement from the financial sector.
Thank you so much. I mean, super fascinating. And I must say, I think we're in a unique moment, at least in my life, with this period of quantitative tightening, while the fiscal policy taps are opened up, to enable the energy transition, in Europe and North America. And I wanted to follow up with Anne-Sophie on one of the points that Ivan raised around this. I'm going to ask a couple of questions and then I'll hand it off to Catherine, but around the interaction between timelines and technology and ING's decision to engage with steel and shipping on the transition, because those seem like very challenging industries, and just the dialogues you've had are what enabled you to pick those clients to work with on targets in steel and shipping.
Yes, indeed. And as I was saying, I think that's really a work that we co-build with our clients, and we work very closely with them so as to ensure that we have the right understanding of what needs to happen in those very sectors. Where is the technology? What's the maturity of the evolution of those technologies, and how we can apply that for designing the direction. And for that, we need to have the right understanding. We need to have the right bankers around the table. We need to have the right, I would say, the industry well represented. We need our peers. We need think tanks, NGOs to design that. And in parallel, so as to nurture that and beyond specifically steel and shipping, on which we have contributed to really design the direction. We are now doing that for designing the specific sector transition plans that we need to build so as to, I would say, have sufficient clarity on the level of sophistication of the client transition plan that are now coming to us, because more and more clients are also building their own transition plan, and we need to form a view on, are those plans in line with our vision of those sectors and what needs to happen in those very sectors, so as to potentially challenge them and agree on where we can play a role so as to accelerate the transition of our clients ultimately as bankers. So indeed, really a teamwork, I would say, with many stakeholders around the table.
Thanks. And then I'm going to ask one last question, and then maybe Catherine can sort of share some conclusions from the survey, and then ask more of the audience questions. But it's around this question of, bold moves and what enables a bold goal or bold action at a bank. And I wondered if Ivan could speak a little bit to the, you've set a very bold, like some near-term targets, and like you wanted to get net zero earlier than a lot of your peers. And so what enabled that ambition? And then the question for Anne-Sophie is about, similarly, on the trade finance, that seems like a bit of a challenge and maybe like a risky decision to go out with a policy like that. So what enabled you to do that, and in terms of take that bold position? But maybe we'll start with Ivan.
Yep. I mean, I think the first and probably most essential ingredient is really the leadership at the top. I think without board leadership and support, and without CEO leadership and comfort in this space, it's hard to make the level of moves that are really required. And so I think for us, that's been an essential ingredient. And it's funny to think of banks as having personalities. You know, they're supposed to be nameless, faceless vaults of transactional activity, but I think, you know, banks do have personality, and they do have history, and they have legacy, and they have an approach to these problems which is different one institution to the next. And I think, you know, you can start to see that, and you can start to see the banks that have sort of stepped into this place, sort of, you come to expect it from them because it's become part of who they are. I will say for us, we're about to celebrate our 100th anniversary. We just turned, actually last week, 100 years old. We're doing the celebration next month, but it is, you know, we are very cognizant of the fact that we were started by a labor union that was providing banking services to immigrant workers you know, that were fleeing to this country and trying to create a better life and send money back home to Europe. And so it was about creating a banking system that could work for them. And so I think some of that heritage and leadership is still obviously with us this whole time. But I think that leadership, I also do think we need to listen to outside stakeholders. I think you get a lot of, being in a bank, you get a lot of attention from stakeholders and NGOs and you know, sort of everybody who has an opinion. And it's easy to kind of dismiss all of that as, okay, it's easy for you to say, but the work here at the bank is really hard. But I think the most productive relationship is to really engage and to listen. And because I think there's a real common perspective in the science and in what we need to accomplish for society that we can all sort of be driven by.
Nice. Thank you.
So maybe to continue, one word on TCF and our approach, and there I think I completely agree with Ivan and on the fact that indeed sometimes you need to demonstrate that you have leadership and to be bold in the decision you make. And as ING, for what concerns oil and gas, so far we were focusing only on the part of the value chain which is really responsible for the biggest climate impact, and this is the upstream oil and gas part. But at the same time, we are one of the largest bank for TCF worldwide. We know that, and we had that vision of indeed how to capture that part of our business related to oil and gas trade. And that's really by engaging with the business part of the organization that we came to the conclusion that we wanted to do something about that. And that's why we were able to reach an agreement with them on that direction of aiming to reduce the volume of trade oil and gas. We finance using the similar approach that the one we have and we've committed to for upstream. And we have for upstream a target which is very much linked to the IEA pathway, which is to reduce by 19% by 2030. This is, I'll say, not a CO2 intensity measure. This is really the commitment to that particular sector that we want to reduce. And we want to have the same approach for TCF because we think that this is quite powerful to show that we really want to work on the volume of the trade that we finance. And there's a lot of volatility in that market for sure. So we need to really set a target that capture the progress we make. And we have set that, let's say, dot on the horizon. We said by 2024, so next year at the latest, we will have that approach. It will be in our target. We will have commitment in that direction, but we want to build that together again with others. We want to have a collaborative work around it, and we are, as we speak, reaching to our clients, to other peer banks, to experts, to really co-develop that methodology, supporting that direction, because we believe fundamentally that the world needs it.
Very exciting to hear you mention the IEA pathways and also these sort of structural parts of the financial system because everything is done as a syndicated lending or in other spaces. So it is about the peers coming together, and it's really encouraging. So with that, I'll hand it off to Catherine. We have some questions from the audience, and I'll just remind everyone, if you want to ask questions, because a lot of information has been shared, if you want to ask questions, please just type your questions into the chat and we'll try to get to them. I'll hand over the microphone to Catherine.
Great, thanks Hamish, and thanks again to Ivan and Sophie. So we've had some really great questions in the chat, and I'm kind of interested also in what the poll answers are revealing. It's quite a diverse range of answers. But one of the questions in the chat is asking for examples of banks from the West who are kind of leading in terms of the climate transition in the absence of kind of regulatory support. Now, I think happily we're kind of in the presence of two such banks. But Sophie, I was just wondering if you could kind of speak a little bit to the motivation for ING's kind of position of leadership with ING's climate strategy and that kind of thing. Like what is driving your position here?
I think there are two main drivers into the decision that we've made over time to be, I would say, trying to continue to be at the forefront of that move. First, this is the belief in the role that we have to play in society. I think we as I was saying in my introduction, we have a board that is really pushing for that. They've decided that they want to be a banking leader in building a sustainable future, not only for our own company, but for the society, for our customer, and for the environment. And for doing that, we look at all our stakeholders, and we play our role. We want to finance the world into that direction, but with having a positive impact, be it on the environmental or on the social front. Because ultimately, the world needs to decarbonize itself. We need to fight climate change. But, and that's the good news, the second argument, there are massive opportunities related to financing the transition. And that's for us as banker also something we need to recognize. We can definitely play a role and benefit from that. I think CapEx required by the transition as in the magnitude of 5 additional trillion each year till 2030, we want to achieve our goals. So this is an additional good reason to take a proactive role, to be seen and recognized and positioned so as to grab those opportunities. So here, this is more the banker that is talking. I think that's a combination of that ambition together with playing a role and being part of that transformation that we see as, very compelling reason to go into that direction.
Yeah, thank you. So it makes good business sense and good human sense, really.
Exactly.
Yeah. So I love that you're kind of talking about the opportunities that we're looking at here, and particularly Ivan, you mentioned kind of what would actually support banks in their climate transition is kind of supportive policy in the real world. And it looks like a lot of our participants agree with you with kind of the answers to question 4, what would be most useful for increasing lending and underwriting to climate positive companies, stronger regulation. So I was just wondering kind of from your point of view, Amalgamated Bank, what are the kind of industry trends that you're most excited about this year kind of unfolding in the US and beyond? And we're on mute again, I'm afraid, Ivan.
Apologies. There's a huge focus in the US because of the Inflation Reduction Act in a whole bunch of sectors, and it covers everything from heavy industrials to the consumer segments. Everybody's getting a heat pump these days. Solar is like booming again. It's driving investment from domestic production, which I know has been a tension point with Europe, but is, this is in many ways has been industrial policy. And so this is very much dominating a lot of the landscape. I think on a going forward basis too, we need to do a lot more on the built environment. And so, there are, it is very hard for the finance sector to go into a real estate market and drive the market, particularly in a sort of post-COVID period where we both have a housing crisis and we have empty office spaces. And so this is where policy that is really thinking about how to shape the real estate sector and how to decarbonize the real estate sector and what the requirements are going to be, that's going to be what shapes the kind of the environment for us to be able to finance into. It will be very difficult for any collection of banks or individual bank to kind of go in and sort of make that market in a truly sustainable way. So we're kind of focused a lot on the policy side of this. What is sort of the next ball to drop from a regulatory perspective in the US is really around climate risk, and the work that's being done by the Fed, OCC, and FDIC around climate risk. But that, again, is sort of different and discrete from the net zero work that we've been talking about.
Mm-hmm. Yeah, great, thank you. And I think that kind of triggered one of the other questions that we've had from the audience is, what are the challenges, if any, that the banking sector is facing in terms of carbon accounting, kind of applying PCAF, that kind of thing? And I'm curious, like, does that come about in real estate as well, or in any other sectors that Anne-Sophie, ING is facing, or Ivan in the US?
Yeah, well, there are many dimensions to your question. Basically, many of the methodologies that are out are very useful so as to have a first understanding of where we are, but some are still, let's say, evolving and not always providing, a fully stable, I would say, level of understanding for what enables to, for instance, compare year after year and or monitor the progress, which is sometimes a bit frustrating to some extent. So we are very mindful of using approaches that are as stable as possible, so as to ensure that indeed we can really be transparent in the progress we make, and sometimes indeed using indicators that are evolving from one year to another is not the best way to do so. So this is I mean, again, climate is making progress in terms of measurement and data, but data remains sometimes difficult, and the usage of proxy is something the industry still has to go through so as to measure progress, and that's going to stay the case for quite a while.
Yeah, interesting you say it's going to be that way for a while, because I think we're seeing a lot of hesitancy from financial institutions to really get going with looking at the, setting targets or putting in place transition plans whilst we're working with this kind of level of data quality. But really there's a lot of urgency in this. Now I'm going to kind of merge two questions that we've had here, because it's just coming back to one of my favorite topics, which is transition plans. But one of the questions is around kind of in terms of financial analysis, risk analysis. Banks have teams of experts that do this day in, day out. But when it comes to assessing climate issues or transition plans, kind of how is this integrated into the teams, into kind of the sectoral teams? And then, so that's kind of coming from the bank out. But then also we have a question of how your customers prepared to engage on these issues. So it's kind of really thinking about how your team's prepared and how your customers prepared to engage on transition plans wherever they are in their process.
Yep, maybe I'll jump in. First, I think it's being in a smaller bank, right? So we don't have unlimited resources. I mean, nobody does, but we don't add to kind of have climate expertise built into every business line as a sort of full-time endeavor. So it really is about creating an environment where everybody feels like this is part of their job and sort of brings it to their work as they do any other function that they undertake. And so I think climate targets help to do that, because it makes it clear institutionally that this is the role of every business line. It's the role of the accounting teams. And so, it feels like this is, it embeds it throughout the organization. And the as to then how we kind of work with our clients, I have to say, I think this, I think you cannot take a client who's coming in and asking for money and make them do something that they're not prepared to do, or that they haven't thought about already in a significant way. I think it's very hard to kind of say, okay, this is your business line. I understand it. I understand the metrics that you're working with. We think you should do something different. Or, and I think largely it would be nice to think that, we had that kind of forcing power. Capital markets don't tend to really work like that. They tend to work to the lowest common denominator of price and simplicity. And so it is, but I think, what we enjoy is sort of working with the clients who seek out us because of our position on these issues and our expertise on these issues, and find a good fit with what they're doing. And then I think often the conversations you can get into are collaborative ones about how to really form a partnership around the finance that you're doing, or work together, or think about the long term of how their business is going to grow and keep doing better. And so I think it really starts from what the client already has as their objectives and their approach, and that creates the kind of foundation for what the bank can work with.
So it sounds like it's just really integrated into kind of that fundamental banking relationship between your team and your customers, really. Yeah. And Sophie, very ING and amalgamated banker, quite different entities. How do you see this comparing to Ivan's comments?
Yeah, I think it boils down to, indeed, how do we make sure that we operationalize really what we need to do, and how we make sure we include targets in the decision making. We have the process we have regarding new financing. So indeed, it means that our banker need to understand what it is about, what this entails, and ensure they have the right level of awareness and understanding. And we need to train them for that. They need to feel at ease engaging with clients and having that kind of conversation, which is not that obvious. The good news is that in Europe, clients are more aware and are also pushed by regulation, and this is a key accelerator. I mean, we've now the CSRD coming into force and being implemented in the next few years. Large corporates are going to have to report on dimension they were not reporting before, and that enables again our banker to be, I would say, brought along the way, and to have easier conversation on those dimensions. So that, I think this is clearly an accelerator, but that requires indeed a lot of effort from the organization to ensure we are at the right level of the conversation and of the understanding of what needs to happen in those various sectors.
So it's not up to the bankers really to be educating clients, but kind of we're working together in partnership.
Absolutely.
Based on common support. Yeah, great. So I've just got one eye on the clock, and one of the things that I really wanted to ask both of you, as kind of respective leaders in kind of different environments, what are the kind of top, say, 3 lessons that you would have for your peers, your banking peers who kind of want to follow you on this climate journey? Ivan, maybe. Do you want to take the first stab?
3 lessons. That's an awful lot. I feel like I'd have to go in the consulting business. No, I think the one is, maybe it's more advice than a lesson, but I think the last few years have felt like a sprint that turned into a marathon, and I think I think you have to be ready for endurance, and it is hard and work, and it's not going to get any easier. And so I think we just have to kind of have a pace and approach to this that we know it's going to be tough for a while. The other thing I would say is this: it goes back to leadership, and I don't think you can, as an employee at a bank, you can kind of pick your leaders, but I do think where you work matters. I think there's a lot of firms that are hiring right now, and there's a lot of great opportunities, and I think as you're who you're working for and the leadership at the top really matters, because I think that's going to set the frame in terms of like empowering you in the work that you're doing. And so I would sort of just pick those 2 things. So one is, go running, go walking, get some exercise. It's going to be a race, and then be selective about where you apply your labor.
Yeah, that's great. These aren't just kind of set and forget kind of targets. There's more where that came from. And Sophie, if it's not 3 lessons, then 1 is fine. But what do you think?
Yeah, for me, what is absolutely key is to have the full buy-in and the full support from your top management, from the board. And either it exists already, or the question is, how can you foster that? And what can you do so as to ensure that indeed they have the right understanding of what is, I would say, what is at stake. So that's part of, for instance, my team is spending time training the board, training the supervisory board even, so as to ensure that when they make decisions, those dimensions are taken into account. And originally, we even did that for our CEO, wanted to know everything about climate methodologies. So it was super inspiring, and so inspiring that he made it mandatory for all his fellow board members. So quite nice to see the level of ownership it took on that occasion. And the second dimension is maybe indeed making sure you work with the business, because again, that's great to have plans and targets, but the question is how to make sure that's understood and people will run into the same direction and deliver on that and really ultimately have impact. Because targets are one thing, delivering on those targets is a completely different ball game, and we need to have the organization with you to support you into that direction. So the business to engage with clients, but also risk, finance, and operation, so as to facilitate implementing that in the business as usual, I would say.
Right. I think so. If we don't have commitment from leadership and collaboration, then we're not really going anywhere, are we?
Absolutely.
Perfect. Well, thank you so much for taking those questions, and thank you to the audience for some really interesting suggestions. I'll hand back over to Hamish just to wrap up.
Thank you so much. And yeah, I would just thanks everyone for joining, and thanks to the speakers and for Catherine helping to run this discussion. What I would like to say, there's going to be a recording, so we'll share that with you. There's some questions that haven't been answered, so we'll take those. And there's been some requests to see the poll results, so we'll also share those following the webinar along with the recording, if we can. And I would just, if you have any further questions, feel free to follow up. And I would just encourage you to have a closer look at the work that Amalgamated Bank and ING are doing, and see what pieces you can bring into your client conversations or your own operations, because it really, I was saying at the beginning before we started, there's nowhere to go but up. There's a lot of work to do across all industries. And so it's going to be a very interesting decade. So we have 2 minutes left, so I'm going to take advantage of the last 2 minutes to ask each of the speakers to tell us one thing they would like to see happen this year, if there's with respect to their work in the climate space and finance space.
It's a push goal or a stretch goal, but I would like to see the NZBA guidelines updated ahead of schedule at COP28 or whatever is the next one. So
nice, thanks. And Sophie?
Yeah, I would like to to ensure that we see real impact and we finally see things. I mean, the pace of change that is required is massive, and the outcome of the last IPCC report was quite scary to some extent. So saying it as a turning moment, starting to see an improvement of some metrics that we monitor will be a very good news. And let's make sure that we have in place the right policies or sets of actions so as to contribute to that.
Excellent. Well, that's a wonderful note to end on. We know the technology is here, the money is here. We just need to move it together and move things along at a significantly faster pace and be trained up to do so. So I'd just like to thank everyone again and wish you all a good afternoon or good rest of the day if you're in North America. And we'll be in touch. And the next webinar is in June, looking at private markets and the energy transition. Thanks again to the speakers and the audience. And it's been a pleasure, and see you at COP28, if not before. Thanks.
Bye-bye.
Bye.
You.